Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian shares. They're largely up with markets in China and Tokyo clinching fresh multi-year highs, despite of course an absence of fresh clues from offshore. Mainland equities were on a roll with China's key Shanghai Composite bolstering 1.5% to a fresh 7-year peak. And of course, Hong Kong Hang Seng Index surging 1.25% to touch with 7-year highs. Japan's benchmark Nikkei 225 index rose for the 8th straight session to finish at a new 50-year closing high. Earlier in the session, the Tokyo bourses hovered, however, in negative territories following a brief 15-year peak of 24.57 at the opening, and then made a final push above the flat line in the final hour of trade. Australia's S&P 200 index overlooked a lack of fresh cues from the US to settle at a near 3-week high. The benchmark index also got a lift from a buoyant banking sector which extended gains into a second straight session. Against the yen, the US dollar touched a 2-month high of 122.75, trading away from the recent 8-year peak above 122.04. The ECB stance, along with ongoing worries about Greece, should keep the euro pressuring against the greenback. The common currency was last 0.3% lower at 1.0954, having in the last few days retreated from a high of 1.1468. European markets, as we're at it, opened higher on Tuesday despite concerns that Greece is finally about to default on its loan payments. Struggling Greece needs urgent financial aid to repay a loan due next week to the International Monetary Fund and, of course, make sure it can still pay wages and pensions. Elsewhere in Europe, UK Prime Minister David Cameron told European Commission President Jean-Claude Juncker that the country needs a new deal on Europe. As of course, he continues his efforts to reset the UK's relationship with the single market. Having a brief look at the commodity sector, gold over there was stuck in a tight range above the 1,200 ounce level during the Asian sessions. However, as the dollar jumped to a fresh 1-month peak against the basket of major currencies on the prospect of higher US interest rates this year, gold has slipped to 11.94 an ounce in early European session. The metal was little changed in the previous session, as we all know, as liquidity was very thin due to US and British holidays. The price is now heading towards the next major support at 11.82. Also, in the energy sector, crude oil prices were broadly unchanged early on Tuesday from their previous settlement as ample supply offsets firmer demand. But of course, the strengthening US dollar meant a recent oil rally was running out of steam. US crude was up 8 cents at 59.80 a barrel during the Asian session and is now down 30 cents. Also, very important news today in the calendar, we're looking at durable goods orders for US at 12:30 and of course new home sales and consumer confidence respectively at 14. That's all from me for today. Thanks a lot for watching. See you next time. However, please keep attention to the calendar. All eyes on US today. Thank you. Bye-bye.